Hey Bryce, I got a quick question for you. I've got, obviously being a real estate agent, I get tons of, kind of junk mail, but some of them catch my eye, and I'm starting to see a lot of the emails saying, hey, we've got, the interest only rates, or they appear to be coming back, or at least I'm starting to see a lot more of that in my mail, and again, I don't really look at it, and I always call you for advice because I know you know more. But what would be some situations that you would advise that for someone, or do you totally steer away from it? What are some of the risks?
Yeah, great question. So in large part, most all of the interest-only loans have gone away. Um, the, I would say for 95% of the population, they either are not eligible to go interest only or they're not choosing to go interest only.
And let
Um,
me interject real quick. I
yeah,
probably meant to say the ARMs, adjustable rates.
yeah, they typically are an arm. So it'll be
Okay.
like a 7-1 arm or a 10-1 arm, but then it may have an adjust or an interest only period, right? So it could be fixed for that 10 years and then have the interest only period. And obviously, whenever you have an adjustable mortgage, you have to understand what the risk is, right? It's not inherently a bad loan in and of itself. It may actually be a great loan, but it just has to fit your situation, right? And if you are, say, for example, you're retired and you're on a fixed income and you don't plan on moving in the next 5, 10, 15 years, if you would ask me, should I get an adjustable mortgage? I'd say, heck no, right? Heck no, because your risk criteria cannot take that type of uncertainty. Now, on the other hand, if you were to tell me, hey, I'm in San Diego for a job, I'll probably be here 2 to 3 years, and then I'm out of here. I'm going back to the East Coast where I was born and raised and where my family is. I'd say, okay, well, maybe you could consider the risk of going adjustable at that point, where it would be fixed at a very low rate for 5, 7, or 10 years, lower than what the 30-year fixed rate would be. So you'd have some lead up time, and then you could safely go back to where you came from, right? So it really just depends on your criteria, what your goals are, what you expect to happen going forward, and then you make your best choice. But as long as you understand the risk and you're okay with that risk, I think it can be a good product. Now, regarding the interest only part, interest only just adds another component to that risk, right? Because you usually have an arm with an interest only component. It's riskier because you're not paying down principal, right? Your balance is literally staying the same unless you're putting extra money towards your payment every month. And that can be risky because if the market were to take a little bit of a dip and you didn't have the equity that you had before, maybe you can't get out of the property like you could have. You can't sell it because there may not be enough equity. So I think there are places for many, many loan products out there. You just have to talk to an advisor who can help you sort through all of them, take an inventory of what your situation is, and then custom tailor, a mortgage option to you. But great question. Does that make sense, Matt?
Yeah, it makes perfect sense, and I think that kind of ties in with some things that I've been saying. Is it's don't look at us as professionals. I will look. That came out wrong. Look at us as professionals, but don't look at us as just a one-time service provider. Don't look at us as like retail. We're here to have that relationship with you so we can learn more
Absolutely.
about you, so we can better guide you to
Yeah.
what you've shared with us is important to you. So I
But
think
for
that's
sure, and that brings up another question that I get all the time, which is, hey, people call me and they immediately say, "What's your rate? What's your rate, and what are your closing costs?" And it's like, hey, well, I have 50 parameters that I get to put in my system to figure out what rate you'd qualify for, and then on top of that, there are probably 50 programs that I could put you in. And so just coming up and saying, hey, what's your rate? What are your fees? It's sometimes not a great way of comparing two different offers or really trying to get to the bottom of what you're going to get in terms of an interest rate and fees. And in terms of comparing with another lender, it just, you have to talk to an advisor like myself, someone who can really sit down with you, look at your goals, look at all the different factors that go into your interest rate, and then make an informed decision from there.
Yeah, I think you hit on another great point. Is I've had people that have done the online. I can't even think of the name of the company now.
Rocket that they fly on the rocket.
Not rocket, but kind of like one of those things, and because of all their almost like the e-insurance stuff, right? But again, when you do that, you lose that hand holding. And a lot of times when you're online, I've dealt with people in different states that don't really understand how California escrow process.
No doubt.
You can crash a deal. I mean, it could, they could cost the buyer more money. The seller could cancel. The buyer could lose the earnest money deposit. A whole bunch of different things could happen. So it's really important to have someone that, again, knows yourself.
And I think both in your industry, well, we're in the same industry, but your profession and my profession, people automatically think, oh, internet, I'm going to save money, right? I know at least in my line of work, that's not always the case, right? The big name that I mentioned a minute ago, they tend to be quite a bit more expensive than someone who would be here operating locally in California. Their rates, their fees, and it's not just them, it's many other mortgage companies as well. They tend not to have as good of a deal because they're focused on the whole United States and not just the California market. But great points, Matt. Love it, man.
Cool.